Iran, Israel, and U.S. war. If the markets are uncertain, why is gold and silver going down? That's because the war is actually helping the U.S. dollar, and that's one of the key reasons gold and silver have been struggling. Here's what I mean. 1. Global fear equals money runs into dollars. When geopolitical shocks hit, investors look for liquidity and safety. The assets that usually get that money first are U.S. dollars, U.S. Treasury bonds, and sometimes gold. Because the dollar is the world's reserve currency and the most liquid market on Earth, capital floods into it during crises. Right now, that is exactly what is happening. The U.S. dollar index has been rising as the Iran conflict escalates, reflecting strong safe haven demand. 2. Europe and Asia are more vulnerable to an oil shock. The conflict threatens the Strait of Hormuz, where about 20% of global oil moves. Countries that depend heavily on imported oil, especially Europe, Japan, South Korea, and India, are economically more exposed than the U.S. So investors think if energy explodes higher, those economies suffer more. That causes money to leave their currencies and move into dollars. 3. Oil shock equals higher U.S. interest rates. If oil spikes, inflation rises. Markets are already starting to assume the Fed may delay rate cuts. Interest rates could stay higher longer. Higher interest rates make the dollar more attractive globally. 4. Why this hurts gold in the short term. Gold struggles when the dollar strengthens and real yields rise. So you get this paradox: war, fear, stronger dollar equals pressure on gold. That's why metals sometimes dip at the beginning of geopolitical shocks. 5. But this can flip later. Historically, the sequence often looks like this. Stage 1, shock. Dollar spikes. Gold is flat or down. Stage 2, inflation shows up. Oil drives CPI higher. Real rates fall. Stage 3, gold explodes. This happened during the 1970s oil shocks, the 2008 crisis, and the 2020 stimulus era. A lot of you have been asking why gold and silver are going down when the market is unstable. This is why. And no, this doesn't mean the dollar is getting stronger long term.